Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I'm very bullish on copper and other base metals, but finding a lot of good exploration projects is somewhat challenging. And today I've got a brand new public company that has been doing a lot of great work on a project that formerly belonged to what's the name of the company?
Glencore,
Pardon me?
Glencore, Glencore.
Glencore, one of the world's largest mining companies. And they were able to pick
Mm.
this project up and do a bunch of work, and they're going to sort of hit the ground running. And I wanted to talk about that with Peter Van Elfen with Nuvau Minerals. Peter, thank you very much for joining us.
Alan, it's a pleasure.
So I guess the first thing that kind of comes up when people are learning about Nuvo is why did Glencore give this to a junior?
Yeah, and again, thank you very much for the opportunity to speak to you and everybody else that's going to watch us as a result of the work you've done over the years. Simply the Matagami property in Quebec was a property that Glencore acquired through its acquisition of Xstrata. And the Glencore camp has got a long history, about 60 years of production has come off it. And the processing facility there limits you to about 3,000 tons a day. So, although decent sized operation, it's relative to the sort of size that Glencore is looking for, it's relatively small. And so the property was non-core to them. It also was at a point where it needs exploration dollars to be put into it. And so that was where Glencore was looking for somebody to come in, essentially take the property over and give it that, the love that it was needed from an exploration point of view.
And I'm seeing that with some of the other major mining companies. They're kind of divesting themselves of projects that are not going to move the needle for them, but could be company makers for smaller companies.
Yeah, I think that, my career has all been based in the junior industry, and it's not, what I've learned, if I compare my first journey into this space was with FNX, and we were working alongside the then Falconbridge and Enco. It's just that we are different. We're not better. We just do things differently. We use the same people, we use the same equipment, we work to the same high standards, but we're able to be more nimble. We can make decisions faster, often different risk profiles. And we have the ability to do things on these properties that they can't do. And I think that we've seen that with a number of companies, certainly that I've been involved in, that we're able to make a big difference in terms of the profitability. When you Glencore, you've got multiple assets all over the planet that you're worrying about. I've got one place to worry about, and that's Matagami. So I can give it a lot more attention than the people at Glencore could.
And so Glencore, they kept an interest in Nuvo, and plus you've also done an offtake agreement with them. Is that correct?
Yeah, so maybe I'll give you sort of the high level of the agreement with Glencore, because it really is one that I think is really favorable to us and our shareholders. It speaks to Glencore's commitment of really looking, they're interested in the offtake. So let's start with what Glencore keeps. Glencore will retain a 2% NSR, and they will retain the rights to the offtake from the property. What we do in return to get that, or to get the property, we own 100% of the property afterwards. And so initially we have spent $30 million over 3 years on as an earning. We're in our third year of that. We've got about $5 million left to spend, and that goes up until the end of Q1 of 2025, so to the end of March of next year. And so by that point, we've invested 30 million into the property, and that's been on exploration, essentially. But we've also been able to do other de-risking work, some permitting that was required. We've been able to advance some of those efforts as well. So 30 million on the earning. At the end of the earning, which will be in, as I say, in the end of March next year, there's a final payment to Glencore of $10 million. 5 of that is in cash, and the remaining 5 will be in equity. We can do in equity or cash. And then one of the pieces of this property, which really makes it a unique story, is that we get access, we get to take over the infrastructure as well. And so this is permitted infrastructure primarily in the processing plant. And so for that option that we've got there, we've got basically the rights to take that over. We do that for an additional sum of 5 million. And again, that's going to be cash or equity that we can do there. So Glencore will end up, at this point, for all intents and purposes, they'll end up with a 9.9% position within Nuvau. And we will then have paid them, or we would have invested the 30 million, which goes into the investment into the property, 5 million in cash to them. And then later on, when we eventually make a production decision and go back into production, there's a further $5 million cash payment to them. But that's it. That's all that we, so essentially it's a combined of 40 million in cash that we put in and 10 million in equity.
Okay. So it's got a real wow factor to me, but wow factors are one thing, but people that have done executed on a wow factor in the past is something that is also very important to me. And you did this in the past with Premier Gold. If memory serves me correctly, Premier Gold's Geraldton project, which is now the Greenstone mine that Equinox is bringing into production and will be one of Canada's largest gold mines. You guys acquired that from Barrick, I believe, and it was an old producer, and you revived it with drilling. And now, the rest is history, so to speak. It's now going to be an important Canadian gold mine. Did I get that all that stuff right, Peter?
Yeah, I think the Greenstone mine was the reason why I actually wanted to join Premier. I was looking for a change. I'd spoken to an ex-colleague of mine, somebody that I have a huge amount of respect for. I'd worked for Tony McCooch, and Tony was on the board of Premier, and he introduced me to Ewan Downey. And so this was back in 2019. So I really joined Premier because there was this opportunity to build an amazing project in Ontario, great jurisdiction, a project that is going to be there for a long time. There was an amazing team that had already been established there, and so that was the reason to join them. Unfortunately, in this junior mining space, we sometimes have to. We do what's right for shareholders, and Equinox came along there and ended up acquiring that, and they built it.
Yeah.
But it's that team that has built it, Eric Lamontagne, and that group there that's done an amazing job at building that operation, and it's going to print money.
Well, you've got a bit of a leg up here in that that needed a mill and a processing facility to be built, had to go through all the permitting and everything like that. Whereas here at Nuvau in Matagami in Quebec, you've already got the permitted mill, and you have a lot of exploration potential as well.
Yeah, I think that certainly when we first back in 2021, end of 2021, when we first got access to this opportunity and we were looking at it, is there was the obvious, like, this is an exploration opportunity, very with really, and I know every junior says this, but man, this is an incredible land package, and we can go through that in a bit. But what really appealed to me was, having spent my, from my accent you can hear I'm not a native born Canadian.
Yes.
But in the 20 plus years that I've spent in Canada, I've had the privilege of working with some incredible juniors, right? And the first of that was being part of the FNX team in Sudbury, and really taking those old assets from Inco. I like to say to people, look, McCreedy West, back in whatever that was, 2003, was a mine that was done according to Inco, and it's still operating. There's guys working underground there right now, and it's still going. And so, when we looked at this kind of had this ring of, can this be the FNX of Quebec? And I think it can be. I think it will be different. The deposits are different. Glencore Zinc has, they from everything we see there, they're incredible. They're good at what they do. But the scale, as we said earlier, is just not for them. But so we looked at this and thought, what, this has got the opportunity of being that sort of FNX of Quebec. What's better than FNX is because we've got processing facilities, so we've got more control on that. Back in the FNX days, we were relying on Inco sending all of our production to Clarabelle. And so in this case, we get the value add all the way through to the concentrate, where we were essentially selling, they were doing the processing. And so, our offtake included that with FNX. So, this really started to appeal to me. It's, with Lakeshore Gold, when I was VP of operations there with Lakeshore and eventually with Tahoe Resources, again, it's taking the assets that are not necessarily the highest grade. We were next to Hoyle Pond, but the Bell Creek mine in Timmins was making money. It wasn't because we were smarter than anybody else around there. It was just we worked differently. And so we were able to get those assets making money at an average grade of less than 4 grams a ton, and gold wasn't at $2,600 an ounce then. It was a
I
lot lower, but
remember
right, but we
Lakeshore
could,
was a pick of mine, so it was a
yeah.
good result.
So and again, it was how we managed them, and so I was very privileged to have learned so much from guys like Tony, Bill Shaver, some of the old Dynatech guys, Terry McGibbon, like all guys that have been really instrumental in my career. So looking at the Matagami camp is that what you've got there is you've got this enormous exploration potential. And sometimes I don't give it enough airtime just simply because it's, it's almost like, well, it's obvious that it's there. Sorry, I'm just a dumb mining engineer at the end of the day, right? And so I love the operation side of it. I really do. I love the underground operation side of it. And so we've got resource on the property. We've got a processing facility available to us. We've got $300 to $400 million worth of infrastructure that we get to take advantage of. And that comes at a price tag essentially of $5 million. And so I would say that's a deal in anybody's book.
And you've got a big land package, you've got infrastructure, you've got access, and it's in Quebec, which is one of the best mining jurisdictions in the world. But the real wow factor for me, well, it's a combination. The the permitting and the facility to bring it in back into production very rapidly, the cost that it would cost a company to build something like that and permit that, but then also the exploration potential. So why don't you bring up your slides there, Peter, and maybe people will understand why I think it has a tremendous wow factor, this project.
Okay, so I'm going to start here and we can jump around in these, Alan, and I think you can see
Yep.
often with these properties and with juniors out there is that we get to use these sort of big exaggerated terms for things. This really is the district. This is district scale potential. The property in itself is from east to west is 82 kilometers by 30 kilometers north to south. It's 1,300 square kilometers. And as you can see where the camp sits here, we sit, to our west, we've got Walbridge with the Fenelon deposit, Sal Bay, Hecla with Casa Berardi, Detour Gold, one of the largest gold mines in the country. And we sit on this land package here. This property has been home to 12 producing assets. But these assets, these mines that have been producing have all sat here on the eastern side of the property. And we acquire this property with over 10 million tons of resource. It's in all categories. And they sit over here on the west, what's known as the west flank. And so when we start looking at this, is that this property,
By
although
the
it's
way,
got
Peter, I see a couple of important things there that I think are worth pointing out. One is that you're contained right between two structures, and with secondary structures, that's really important for mineralization. But I also had a chance to do some homework on I did Google Earth, looked at your project, and there are some really large areas of alteration.
Mhm.
And they say that big deposits leave big footprints, and alteration is one of those footprints you look for at the surface, folks, because when the metals bearing fluids make their way up to the surface, they interact with the country rock and chemically alter that. And so, where you see large areas of alteration, it can be a very good indication of where to look for other deposits.
Mhm. No, I think that's the beauty of this is that, again, it's not that the previous owners haven't been exploring on here. They have, right? Is that they've done work, they've done a lot of, there's been numerous airborne geophysical surveys on this property. To the extent that it's actually, there's so much data on this. It's never been compiled into a single model. And so we're
Uh-huh.
actually at the moment, we're busy doing that, and we're going to see whether how well artificial intelligence works on this. So we're working with Verify to take this and put this all into their model. We've started that about a month ago, and it took a while to get them all the data, but there's an incredible number of targets just across this property, just on based on what we know. And a lot of that has been based on what you see in, like you're saying, seeing what we see in the surface topography, seeing what we see with airborne geophysics, but even that is limited to the first few hundred meters, right?
Right.
300-400 meters. You're not seeing any deeper than that. And so, I was actually, and I'll quote this with giving credit to Sean Rosen, who I heard say this at a recent conference, which was, future deposits will be blind deposits.
Yes.
And, when I look at this, is that we've got, I'll just put up a different slide here. Um, Here's an interesting slide. Now, what's interesting about this is that these are targets that have come from airborne geophysics. So that 300 to 400 meter deep window that we get from these tools looking into the earth. And these three surveys, 2020, 2018, and 2016, they were only covering collectively this northern band of the property, what we call the Danielle Belt. And there's over 80 targets that have been identified there through these surveys. And we discovered, this isn't showing there's another discovery on this as well, which was not ours, but we discovered Renaissance, and that is one of those targets that sits there. That's actually it was picked up it's where those three surveys actually intersected, overlapped each other, and
Right.
all three of them picked up that anomaly. The Daniel 25, which is shown with that circle over there, that is another VMS structure there. And, as I say, there's over 80 of these sitting up here that have been hand-picked by a now retired geophysicist, Michel Allard, who's he's a brand name in the Quebec industry, and has, done probably most of the geophysical work on this property in recent years.
And
And
something I see from that, I had a pretty good mentor in geophysics. His name was Gennon McDowell. He was the world exploration manager for Anglo at one time. And what I see there is, folks, if you notice, there's different colors, and what those colors are different rock packages. And when you look at those rock packages, you'll see that a lot of those anomalies are at contacts between two different kinds of rock packages. So that's really important because that helps you identify and filter out what you don't want to be looking for and what you do want to be looking for. Now, another really important thing about geophysics is that my mentor would say, had a running joke that he would say, sometimes the magic works and sometimes the magic doesn't work. And what he was trying to get through to me was that you need to find the right geophysical survey, and then ultimately you have to follow that up with drilling that confirms you have the right geophysics, you're using the right geophysical method to unlock discoveries. And so there are some structure or some rock packages there that stand out to me, and also that you've drilled into these geophysical anomalies and made brand new discoveries.
Yeah, I think one of the things there that and really attracted us to the idea of using the AI model from Verify was that we've got this property was actually used, as I understand it, from some people that have been around on this property for decades that are working with us, is that this property was actually used by a number of different companies that were testing their new equipment, new technologies for airborne geophysics, for example. And
Okay.
so there's an incredible amount of data across this property. Added to that is that there is a lot of drilling that has taken place. So, in particular here on what we call the South Flank, is that's where the past producing mines were, is on the West Flank here, where I'm indicating here, just to the southeast of Renaissance. There's 3 deposits there that have been drilled off. It's called PD1, Quebec North and Quebec. And so we've got the drilling associated with some of these anomalies. And what we hoping to get out of these AI models is really the ability to look for that signature, right? Is to be able to put all these various layers together. Gilles Roy, who's an incredible geologist that I have the privilege of working with on this. He's ex-Glencore. He retired from them, and he joined me right in the beginning of this. And shout out to Gilles. We wouldn't be here without him, and we wouldn't have got this far. And wouldn't have the confidence that I have. He found the last 2, the Bracemac and the McLeod deposits, or him and his team did, as he'll tell you. They found those deposits. He knows this property probably better than anybody. And as he will always say, is that with geophysics, it's more than just a red dot on the map, right? There's
Absolutely.
this sort of multiple layers behind it, and it's really finding how to go and put these together into something that truly generate quality targets, right? We've got
Actually, this map shows some of that layering. Again, I'll repeat myself, but folks, you see the different rock packages, and then you see the geophysical anomalies on top of those rock packages. So these are a couple of the key filters you look for to differentiate a nice red dot on the map and something that can be a discovery.
Yeah. And I think the other piece, just, to throw in something else is, and there was some sonic drilling that took place back in 2012, back in the sort of central northern part of the property. That had anomalies here, which pointed back to the Daniel 25 deposit. We've now been starting to do systematically in places across the property as we now get in opportunity. We just recently did some sonic drilling here in the sort of central portion of the camp. We're going to be out here
Peter,
on.
sorry to interrupt you. Can you tell people what sonic drilling is and why you do it?
So one of the problems with Matagami is that there's a lot of glacier till. There's overburden over this property. So we've got somewhere between in the region of, off the top of my head, probably 40 to 90 meters of overburden here. So we're not blessed with rock outcrops. So we can't go and scratch around and, wash off some rocks there and see what's on surface. We've got to find another way. And so, simplistically, and that's just more because of me and my understanding of things is, the glaciers were moving from a northerly from the north down in a southerly direction. And so what we are doing there with the sonic drilling is essentially taking a sample right down to the bedrock, a little bit into the bedrock, but really taking that full column of overburden material and then analyzing that to see what trace elements are in there.
Got
And
it.
so we've been, one of them is looking for gold anomalies. It really is an interesting tool, it's a tool that in these areas gets used to look for lithium. It gets used to look for gold. It gets used to look for base metals. And so it's really telling you what's happening, what's been eroded off by the glacier. And so looking for that, the way that I kind of describe it to people that are like me, that are, less educated on the exploration side, is really, it's imagine being around a campfire with the blindfold on and you smelling the smoke from it, right? That's what we're trying to do, is understand that concentration of smoke and ultimately having the blindfolded person point back to where this is coming from and sort of understanding what that plume of smoke looks like. And
And
so,
in the case, folks, when you've got this veneer of glacial till, you don't have the luxury of exposed bedrock.
yeah.
And it's that exposed bedrock that and just above it, that you want to be able to analyze geochemically to add another layer. So as Peter was talking about, it's a series of layers that help lead you to, like the breadcrumbs leading you to the prize there.
So an example around that, back here on the eastern side of the property is the McLeod deposit. So the McLeod deposit is the last deposit that Glencore was operating. McLeod was blind to airborne geophysics. And it was simply found because all the deposits along that part of the camp are 1.5 kilometers apart. And so they found Bracemak, they drilled 1.5 kilometers, then they followed it down and they found the McLeod deposit. But what we know with the McLeod deposit is that above it, even in the rock above the deposit before you get to the glacier till, is that for over 1,000 meters in particular, there's gold that we see disseminated through that. And so, again, looking for that, what's been eroded off the top of that deposit when you do get back up to the sub-outcrop, is what's been eroded away. And can we actually use something like sonic drilling as a vectoring tool to point us back to the area of saying, right, the smoke that's coming up from this deposit is coming from this area. So ultimately, there's only one thing that tells the truth in this industry, and that's then the diamond drill bit.
The
And
truth
so,
machine, as they say. But
correct.
I just realized, Peter, that we haven't put this into context of what you're looking for and what was mined here. These
Yeah,
were VMS deposits, volcanogenic massive sulfide deposits. And that was the prime, almost total focus of this project. But
yeah,
it's worth noting that this trend you're in, this geological trend, is very well known for gold deposits as well. And I think that it's a venture to look for more VMS as well as gold deposits.
yeah. I think at this point, and that's simply because that was our commitment to Glencore, is that we would focus our earning on base metals. That's obviously what Glencore is the most interested in. This has been historically, the east part of the property has been more zinc than copper. But now when we're moving over the resource that we've got over on the west flank, that's from a revenue point of view in our PEA, about 55 to 60% is copper and the rest is zinc. And
Oh,
in those,
Peter, you're bringing up subjects left, right, and center, and I hate to
so,
interrupt you, but I get excited about what I hear, and I got to interject. Folks, in these VMS, first of all, they come in clusters. They're volcanoes, and where you find one, you find others. And there's a couple of there's what's called zonation of grade in a VMS system. At the farthest away from the source, if you will, you usually have zinc, silver, and lead. As you get closer to the source, the let's say main volcano, if you will, just for ease of discussion, you get into the copper and gold portion of the zonation as you go out from the source. And so it's very interesting that, there's two kinds of deposits that I look for when I see a VMS, and sometimes they're actually laying right on top of each other. You got the zinc and silver portion and then the gold and copper portion. So it's really interesting that out on the east is the zinc, silver, and lead, and now you're getting into more copper gold rich.
yeah, so just for clarity, basically no lead in this area.
Oh, okay.
What we're getting now in the west is, if we look at the Quebec North deposit, for example, is that that's sitting at about 1.2% copper.
Wow.
And the copper grades are getting up there in Renaissance. We've seen some interesting copper grades coming out of that as well. And typically from a precious metal point of view, these deposits almost without fail like 0.4 grams per ton of gold. And so that's been the genre there. If we look up where Renaissance is, and I'm just looking here for a slide. So here we go. Here's Renaissance. So Renaissance sits here in this, sort of in this northwestern portion of the western the west flank, but it's coming up where it's going up into the Daniel Belt. So this is the latest structure that came through there. And with Renaissance, what's interesting is that it's actually been folded right over. And Renaissance is sitting right in the heart of the fold, where the west flank has been bent and folded over by the Daniel Belt.
So
And
why that's important, folks, is when you get this kind of activity with the rocks, it's preparing those rocks for the mineralization to then make its way through to the surface. What you notice there is there's a bullseye geophysical anomaly that sits right at the bend of a rock package, and it's right at the contact of two rock packages, which I discussed earlier as being an important thing because this is where you get the rocks in prepared for mineralization and also makes it easy for the fluids to make their way up.
And so what's interesting with Renaissance, let's, you said keep adding things. So let me add another one, is that with Renaissance, what we've seen in particular, like the best that we've seen so far was actually in our discovery hole here at Renaissance, where in the lower portion of the hole, it was about 400 meters, I believe, down. I'd have to go back and look in the technical report to see exactly, but it was about 400 meters down the hole. Is that we were drilling this V10 target. We found the massive sulfide, but then we came across some quartz veins. And within those quartz veins, we had visible silver. We had 0.7 of a meter at 9 grams a ton of gold, 500 grams of silver in those
Wow.
holes. And so this is a later deposition, these quartz veins that have come in there, exactly as you're saying, where this has been folded over, it's been broken up, and it's been now filled up with secondary placement of the quartz vein. So, we're looking at this through the lens of exploring a VMS deposit, and that's what we're doing right now.
But then you've got the question of the secondary enrichment with these quartz
correct.
veins coming into the VMS.
correct.
which is quite interesting, folks. That's quite
Yeah.
exciting.
And so really this is now where we're looking at this, and maybe if I can, I'll give you kind of what we see as being the opportunity with this property. Maybe let's get up into the helicopter and fly 30,000 feet and look down at this.
Okay.
Is that the opportunity here, and we can go on, like Renaissance is one of those over 80 targets. Now, I know that not all of those 80 will turn into something, right? We all know that. But statistically is that there's going to be more. Matagami has been made up of 12 mines. The largest has been 25 million tons. The second largest has been 9 million tons. It's been some at about 5 million, 3 million. So it has been a collection of large to small deposits that have made up 60 years of production. And so assuming that continues, below 400 meters, we don't really know what is there. But we know that there's an environment where these deposits have been forming. And so, what we see with this property is we've got infrastructure on this property. So let's, if we look at this and say, right, what makes this unique from any other
Oh,
exploration
wow.
story,
Look at
right?
that.
Is that what this property allows us to do here is, one, we've got exploration potential. We can go on for hours. We had a kind of a brainstorming session about 18 months ago, maybe. We got all the geos in a room and said, come with your favorite 3 targets. And we spent 2.5 days working through this, right? And these are geos that have, they started their careers here, that know this place well. It's got so much potential from an exploration point of view. And so let's, for now, put that aside and say, okay, we accept that there's lots of exploration potential. But what to me makes this property now unique is that we can go and continue exploring. We can continue raising money in the market, continue to, essentially dilute shareholders further and continue to explore. And that will deliver results. Like we don't, I've got no doubt that it will. What we've got the benefit of here is that while we are doing that, is that we can go and use the infrastructure that we've got here. We've got a mill. This mill is, the photograph, this was taken just, this was before we actually took it over. It was still operating, but this mill is in excellent condition. This is not my words. This is G Mining has done a review of this mill for us. We've had a number of
Well, it was
analysts through here.
operating till June of 2022, so it
Correct.
should be, it's practically as it was left.
Yeah, and you know what? Again, I've got to give a shout out to Glencore. They're good operators, and this mill is in good condition. It was described by one of the analysts that came there from one of the banks, and that I took through there a couple of months ago, and he described it as pristine. It's a 3,000 ton a day mill. It's got grinding capacity beyond what you need. It can actually run faster. It has run at a higher throughput than that, but that's a whole different story about optimizing on our production restart plan. But this mill can probably do 4,000 tons, maybe more a day. Two
How
float
much
circuits.
what is a ballpark of what that would cost to rebuild something like that?
Well, I think that's obviously the big advantage here. Remember, and I'll start with we get all this infrastructure for $5 million. So when you look at this, the mill, the infrastructure, the pumping infrastructure, the water handling, the roads, having built the privilege of building a couple of mines, rebuilding some, and just the security fence around the property these days. You don't seem to get anything less than $1 million these days. So everything is there. You can see in the image here, you can see the rail line that comes onto the property. So we can ship this down to C-Zinc. The concentrate goes down there. The zinc concentrate goes down there by rail. All that infrastructure is in place. Our estimate, I think it's light. I've been given higher numbers than this, but I'd rather be more conservative. Is $300 to $400 million of infrastructure that's here. And it is
So all
great.
in, if you look at all the costs, you're in it for like 10% of the replacement,
Correct.
somewhere in that ballpark.
Correct. And so, as I say to people is help me find something that's comparable with this. There's good exploration stories out there, absolutely. There are other production restart stories out there, absolutely. But I know in terms of some that we get compared to, is that I know what this mill looks like, I know what theirs looks like. And this is not a bunch of rusty metal and concrete. This is there's pieces of infrastructure in here that some of the pieces of equipment that were replaced probably about 3-4 years ago, right?
Wow.
It is in really, really good condition. So we get the mill that's still got its permitting associated with it, and Glencore is working with us. We have to get that permitting ceded over to Nuvau, but Glencore is working with us on that. We
What you're
also get
ta what you're talking about there, folks, is that when I look at a project, I look at the Lassonde curve, and there's two big run-ups in the Lassonde curve. One is exploration success. The other is to get it in back in, or get it into production. And in between there can be 10 to 15 years of development. And this is what Peter is describing here. It makes that not only do they have the exploration potential, but they can move that Lassonde, the development discount window of the Lassonde curve down to a couple of years, and then be right into the sweet spot just before you bring something into production. And that development discount window, folks, has a lot of dilution in it. It takes a lot of time and a lot of permitting and a lot of headaches. And so they can eliminate 85% of that development discount window while still maintaining that explorate the left side of the Lassonde curve.
correct. Really, that's very, Alan, what you've described there is really what has been the concept in our heads from the beginning, is that using the Lassonde curve is that we've got a property that puts us on that first part of the curve. We've got the infrastructure and everything else, as well as resource, and I'll come to that in a second, that can put us onto the next part of this curve. And so, it's almost a case of, I truly believe that there's somehow, I don't quite know how to graphically show it, but there's the superimposing of the two together, right?
Where you put
This
them
is,
right beside each other.
yeah, this is like, I think there's a lot of operators that would give a lot for the gold exploration potential only of this property, right? And that's all sitting there. There's never been an exploration program on this property, 1,300 square kilometers. There's never been an exploration program for gold on this, right? And so we can
That's
go, we can run into hundreds of millions of dollars worth of exploration that needs to be done on this property. And so how we anticipate doing it. So we've got the mill. We've now, the tailings facility, I'm really pleased about, we don't have it. And that's because it's nearly full. Now, the tailings facility sits off here just to the left of the image. And the tailings facility, it's 60 million tons. But Glencore allowed us in our agreement to actually exclude the tailings facility. Glencore keeps it. And that why that's important is, one, it's maybe got a year's worth of capacity, but it's got probably $200+ million worth of liability. Glencore is going to keep that. They are going to be responsible for the closure. We don't have to take that on. And so,
wow.
but, it's a little bit like, it's having the mill without a tailings facility is like, I don't know, like having a car without a steering wheel, right? It's not of much use to you if you don't have all the pieces. And so to that end is we started at the beginning of 2023, and we really sat down and looked at this and said, okay, the tailings facility, we don't want that liability, so we're going to choose to leave that with Glencore. But we need a tailings facility. So we started working on the permitting for one. We've had 2 years of ecological studies. We've done our first round of geotechnical drilling, hydrology work we've been doing, because we know what's going to go into it. And so really the objective here is, on the tailings side, is to have an environmental impact assessment prepared by the end of 2025. So we've then got that last piece of the puzzle that allows us then to get this back into production. And so if I look at, with this, and the town is obviously a big piece of this as well, bringing back workers, is then there's two places where we will get resources on this property. And so I'm going to start in the middle. The middle is the Quebec complex. So let me actually, I don't want to jump around too much, but I want to just give you some context to understand where things are here. So if you look
And
at this,
don't worry about the time, Peter. I look at these. I spent a lot of time doing corporate presentations and listening in on due diligence meetings, and that's how I tried to do my first interview. And you got a lot to talk about here, so don't worry. I'm engaged and I'm enthusiastic about everything you're talking about.
Okay, so we're going to shift over. We're going to leave exploration and we're going to say, well, how do you get this property back into production? Right? We've got the infrastructure in place. We've got the permitting coming for the tailings facility. We've got a few locations that we're working on for the tailings. We've got a number of good options for locations on that. So I'm confident we can get ourselves to the point, that we've got a tailings facility in an environmental impact assessment ready to go to the Quebec government. But obviously without resources, you kind
Peter,
of,
I can never take my exploration hat off. And folks, this map here shows you some really exciting stuff. Remember earlier I talked about different rock packages and the contacts? Look at where all of those red diamonds are. Those are all past producing mines, and they're all right at the contact of two key rock packages that make for the that's on the east side. And then look at over on the west side. Same thing's happening there. There's one, two, three stars of those are resources, and then the red star is a new discovery, and it's all these rock packages really get me excited. Sorry, Peter, I
no,
interrupted
no, no, no,
you.
no. But yeah, Alan, here's the interesting piece. So this is, you've got the key 2-5, the old, and to all the geologists that might be listening to this, I apologize for bastardizing the geology here, but is that you've got along the south flank is these deposits sit on what's known as the key 2-5. On the west camp, this is that same key 2-5, this old seabed floor that's come through the central basin and is now coming back up again out on the west camp.
Oh,
And so it's
interesting.
sitting all the way through here, right? But it's too
Wow.
deep for conventional geophysics, right?
Okay.
And so the reason that there's nothing there, the reason that, there's these two intrusions here, there's this, as an ex-colleague of mine would say, this is moose pasture. This is moose pasture because you've got these intrusions. We know there's not going to be anything there, but why have we got this whole land package in between here? It's because the potential sits there for deeper deposits, right?
Wow.
It's just that we're blind to them. So when we say we've got a lot of work to be done here on the exploration side, it's an understatement, right? There's a
Absolutely.
lot of potential, right? So there are conditions that exist on the west flank, the conditions that sit here, and the same conditions here. This has all been eroded away, but this is all the same, basically going through the camp.
Hmm.
And so yeah, you see now we've gone back onto exploration. Let's
Yeah,
get back
sorry,
into
you were getting
let's
onto
go.
the mining.
So let's just, and again, ultimately, I think that these two on this property are so interlinked with each other in terms of the value creation. And here's the reason why. So we've got this exploration package, we've got the infrastructure, we've got the Brace-McMcLeod mine, which is permitted and built. This was the last mine that Glencore was operating. And I'm going to come back to that. But first, I'm going to speak to this resource. So we've got 10.6 million tons of around about 2.3% copper equivalent
Oh,
sitting here on the
wow.
west camp. Okay. And so it sits here on the west camp. These are undeveloped deposits. They've been drilled off. They range from inferred to measured indicated. We've got a little bit of network still that we want to do on the PD1 deposit, but we're very close to the place with all of these that we actually could get them to a feasibility level. And so what we did when we started on this, on switch slides here again, is that when we started with this project, is that, so this is the Quebec complex. So these are the deposits out in the west. Like I say, 10.6 million tons. And so we put a PEA around that. And we said, right, let's do a PEA and let's just look at what the economics look like just of that 10.6 million tons as a standalone.
Okay.
And so we did that first.
So what did like when I look at a PEA, there's certain things I look for. What's your CapEx? What's your internal rate of return? And how quickly can you pay back the CapEx?
Okay. And so this is the Quebec complex. So let's jump here quickly. So here's the Quebec complex.
Yep.
It's 35 kilometers from the mill. There's a portion of the road. The road is there. We have to upgrade it. Sorry, I'm pointing at the wrong screen. The road we have to upgrade on this side of the river, and we've got to put power out there. So there's two large capital items there, power and the road that come into this. Simple mines, two portals. One will service the Quebec deposit and the Quebec North deposit. PD1 sits a little bit further to the northwest, and that will have its own portal. And remember Renaissance, the discovery that we made in drilling on, that sits over here. One of our next targets for one of those, we're getting back onto exploration again. One of our next VMS targets, there's another one sitting right to the east of PD1. That anyway, that's another whole interesting topic on its own, that one target. So this was the PEA. I'm gonna, before I flip onto the economics, this was when there was a technical review done by one of the large banks in Quebec. They described our PEA as being conservative. That's exactly what we try to do here, is that we try to build, we got G Mining to do this out of Montreal. We were not looking for a promotional document, but what I wanted to see is that can we actually build this thing? And so in July of last year, this is the base case, the PEA base case, the 370 copper, 130 zinc, and an exchange rate of 1.3. And so at 8% NPV after tax is 116 million in NPV, IRR of 20%. And
that's using 370 copper. Okay, got it.
Correct. And what we didn't try and do here, we constrained the model on the 3,000 tons a day, but the mine can produce faster than that. We can get that up to probably 4,000 tons a day. There's a number of things in terms of the mine plan. We didn't try and do a lot of optimization in it yet. We just wanted to see is what does this look like? So you end up with 173 million of capex. So the capex is relatively high for where we sit with it. I think it's not 600 million like for RAN and those places, because we don't have to build the rest. But part of this is, remember, 35 kilometers of road, power lines going over there, opening up the west camp, right?
Okay.
Because now you've got Renaissance, you've got these other targets out there.
So you can use that in the future as well.
Exactly. So this is really taking the Matagami camp. Everything has been focused around the mill, and we're now extending it, and we're saying, okay, now let's go and we're essentially opening up a corridor all the way across the northern part of the property, right? Remember this image?
Yep.
Where the mill and everything sits here. This is where this is, and the road comes through here, right along all of this. So this is really very strategic, right? Is that it gets the property back into production, but there's an improvement in that capex and everything else that we believe we'll be able to get here. But this is the base case.
Okay.
So let me go back to this slide. So this is then the Quebec complex, right? This is the PEA. This is what we put there. This was
so that's
the
on
kind
the
of the
west
foundation.
side.
That's on the west side.
West side, okay.
But then we took a look at the Brace-McMcLeod mine. This was the mine Glencore was operating. This is a built mine. It's built by Glencore. Glencore doesn't build cheap infrastructure. This is really nice infrastructure. It's over 8 million tons that they mined here. It's about 6% zinc and 0.9% copper that came out of this. And what we did is we started looking at this and said, well, they probably left something behind. And they did. They left about 900,000 tons behind. And what we also discovered was that this deposit is essentially open all the way around the bottom and sort of from the west to the east. And so we've been subsequently drilling on this. And the objective here is to get this to about 2 million tons.
Are you able to drill that from underground workings?
Not at the moment.
Okay.
Not at the moment. So we're drilling this from surface. We're using wedges, directional drilling from surface holes. So it's slow and expensive. But the objective here,
Peter, did they see as they were deeper in, like I see a barbell kind of situation there, and did they see as they were getting deeper into that system that the copper picked up, or was it always around that 0.9% copper?
No, I think it's pretty much been there's zones in it that I believe you'll see more copper.
Yeah.
But I think it's on average has always been in that sort of 0.91 to 0.9% range.
Nothing wrong with that. That makes copper mines these days.
No, well, that's true. So really, with 2 million tons here, and we're probably 3/4 of the way there already. What we've already got in our internal resource here is 2 million tons gets me 3 years of production.
Okay.
And to get this mine back into production, what we see is that pulling forward some of the Quebec.
I see where you're going with this. You can use McLeod to help you cover the cost of opening up the west side.
Correct. So this we think is about 50 million in capex.
Okay.
The 50 million is roughly made up. We need mobile equipment. We need a new mining fleet, and that's about 25 million. We can lease that with other ways of financing that, but assuming that's cash. So there's $25 million there. We've got to build the first phase of a tailings facility. We've estimated that at this point in the PEA, we estimated the first phase to be about $15 million. And then we've got 5 million for the restart of the mill and 5 million for the restart of the mine. We need to get those numbers a little bit more ironed out and more precise. But roughly in the region of about $50 million, we get this back into production. And so then there's other resources here, but we've stayed away from trying to go to. There's nothing here that's kind of remnant resources, right? We're not trying to build a plan around scavenging around an old mine. There are more resources in the upper part of McLeod, right? That have been left there probably because of wherever the metal prices were at the time. So do we get more life out of this? Maybe. But let's say we get 3 years out of this. So 3 years out of this, we then, on the back of that, we build the Quebec complex. That adds another 9.5 years. So now we're talking about 13, 14 years of production. While we're doing that, in this PEA, just on the Quebec complex itself, with the economics that we saw there, in the PEA, there's even at the base case, there's $30+ million of free cash after tax every year.
Wow.
So as opposed to spending and raising money in the market and diluting shareholders further, what we can do is we can generate revenue from the resource we've got because we've got the infrastructure, and now we can explore. So, really the way I would describe
explore and develop. You can
100%,
develop K-Bird
100%.
and explore with the free cash flow.
Correct. And so, the way that I will describe Nuvau Minerals is people have often said to us, "Are you an exploration company or are you a mining company?" And I said, "We're both. Actually, we're a mining company that is going to do a lot of exploration."
Okay.
Right. That's really and again, what are some of the criticism that gets thrown at us is, lots of people talk about reopening mines and restarting production, but it's a hard thing to do. Well, you know what? I've been very, very fortunate in that, you know, my career has been spent around these type of assets from FNX. You know, I built the Podolsky. I was part of the team that built the Podolsky mine. You know, the Levack mine in Sudbury. You know, with Lakeshore Gold, working those two mines, Timmins West and Bell Creek. You know, even with Premier Gold, is that, you know, we had the Mercedes mine sitting down there in Mexico, and you know, when I joined there, we were break even on a good month, and by the time we sold that to Equinox, is that little mine was, you know, on 40,000 ounces a year. We were making almost $1 million of free cash a month, right?
Well,
It's just about applying and operating these things differently. And so, you know, I think that's the piece there that I'm almost the most confident in, is, you know, our ability to get this back up and running. It's not easy. It's not. But, you know, we need to find a way of, you know, as opposed to we've got approximately 50 million shares issued now, you know, how close can we keep this to 100 million shares outstanding and issued and outstanding, and we're in production, and we've got this exploration budget ahead of ourselves, not just for base metals, but, you know, the gold anomalies on this property. We gave we were part of giving a paper at the Quebec Mines and Energy Conference in November, and we were asked by a group within the Quebec government to present on Matagami, but they said, don't present on base metals, present on gold. And so one of the guys from Laurentia Exploration, who've been our geologist since the beginning, one of the partners there, he did the presentation, was all in French. And so Maxime did this, and, you know, his title of his presentation was Gold, the Victim of Zinc. And, you know, so we've got this opportunity. So really two parts, I'm glad you brought it up, two parts of the Lassonde curve. And really we want to be on both of those upward trajectories. That's the objective here.
And, you know, at the end of the day, that's why I call this a very impressive wow factor. You know, you get exploration success, and then it can be a bit of a anchor, because then you got to go into the development
Yeah,
discount window, and that can last 10 plus
long.
years.
Yeah,
So by what you are able to do is have the left side and the right side right beside each other.
correct.
And, you know, folks, that doesn't happen very often these days with junior miners. And goes back to my earlier comment that you guys are hitting the ground running here.
Yeah, you know, and I think it's also something that, you know, let's throw another piece in here, which I think makes this project exceptional, is where it is, right? Quebec is an amazing place to be working, right?
Yeah.
We have the support that we get from both local, provincial government. It's not about them being willing to cut corners, but it's about them willing to work with us. You know, it's from the Quebec funds, is that it's taken a lot of work, but the case came in as our lead order on our sub-receipt financing, our concurrent financing with the RTO. The case was there. They put a third of the money in, and they're not putting a lot of money into a lot of resource exploration companies right now. So, you know, I believe we've earned a trust with them, and, you know, we fully expect that we're going to be able to deliver on the expectations that they have on us. We had on a smaller scale, but still part of that Quebec ecosphere, is the NQ Mining Investment, which is part of the James Bay Development Corporation. And then Investment Quebec. We've been working a lot with Investment Quebec, and, you know, we're not quite there with them, but, you know, we're getting close. You know, there's been a number of sign-offs there, and it's, you know, I'm cautiously optimistic that we'll be able to put the Investment Quebec logo onto our website and into our presentations here very shortly. And these are long-term shareholders that, you know, will participate in a meaningful way in some of that future financing we need. You know, they are good long-term shareholders to have.
Yeah,
And
it's, the institutional investment has dried up in a lot of places,
mhm,
Peter. But there are still those institutions in Quebec
yeah.
that are only investing in Quebec, and they're not just interested in exploration success, folks. They ultimately want to see mines in that province. And so it's got all the hallmarks ticked off there, Peter, quite impressively. I love Quebec.
I'm going to throw one more in there for you.
All right,
Now you've challenged me is how many more can I throw in? This is like one of those infomercials, right?
there
But
you
wait, there's
go.
more. Is one of the things that this property is also going to allow us to do, and it's actually the last bullet on this slide, is consolidation, right?
Oh,
Is where's there another mill like this, right? There isn't one, right? But there's
oh,
other deposits around there that, maybe, will they ever get this? I don't really like the term, but hub and spoke.
yep.
This is very, very much the hub, right? And
Okay.
so, one of the, again, let me go back to my Lakeshore Gold days. What made us successful at Lakeshore Gold was being able to have a presence in the Timmins camp that you could almost get your arms around, right? I could visit both sites. I could leave my home in Toronto. I could be on the one mine site by 10 o'clock in the morning. And by the end of the day, I'd been to the other mine and to the mill all in the same day,
Oh,
right? So
wow.
there's that regional piece there. So when I look at all of this neighborhood, is there an opportunity? I'm not, well, is there? There is an opportunity, we think, for some sort of consolidation. And that, owning the mill in this area is really a key piece for us. The
Wow.
resource, the exploration piece is critical, but the mill becomes something that, truly makes this special. It's $400 million worth of mining gear that sits there, and what more can one do with this region as a result of that?
Well, you got a big region of your own, 1,300
Oh,
square
no.
kilometers. So you can be the spoke and the hub, and then you can look beyond that.
Yeah, and there are deposits around there that have been developed, and that they where will they get developed and actually built? I think they get built if they've got trucking distances that make sense when they come to Matagami, because it's a
Right.
lot of money to build that infrastructure, and it's a huge hurdle. Like, we would not be talking about this
Time
if we
and
had
money, permitting,
time.
time
Absolutely.
and money.
Right. The Quebec complex at nearly 11 million tons is really too small to to stand alone if you don't have the infrastructure.
Right,
But with the infrastructure, all of a sudden the whole picture changes, right? It
right.
changes dramatically. So anyway, so that's kind of um, the next bit of, what do you call it? The wow factor, we think.
There you go. There you go. Well, you can switch off the. We can wrap things up here, Peter. Yeah, I when Ewan first told me about this project, and then you sent me the presentation, it was like I've talked a lot about putting these pieces together, how companies are not able to do that and put them together, like with the infrastructure and the permitting, and so getting up the left side of the Lassonde curve and then the right side
Mhm.
without this big long gap in between, and then the consolidation potential as well. And that in itself is why I call it. It has a impressive wow factor, this Matagami project that you got from Glencore. And that in itself, Glencore is known for having high quality projects.
Yeah,
This may not move the needle for them, but it's a potential company maker for Nuvau.
absolutely. 100%. Yeah, it's
So,
been it's been interesting.
so what's coming up? What's on the near term for you guys as far as catalysts?
So we're going to have, going into the new year, a lot of our drill program happens first quarter of the year, and then sort of into late Q3, Q4 of every year. So starting in, say in January, we will have we'll have 3 drills turning on the property. We're going to have we'll do a little bit more drilling still at McLeod Extension, but we will have drills on Renaissance. We will also be doing, we may put a second drill on Renaissance as well, but also then drilling a few of these other geophysical anomaly or the targets that we've got out there. We've got a couple there that we're going to be testing, and that we've got the permits, the exploration permits in place for. We will have one of the drills for most of the first quarter that will be doing some infill drilling, as well as getting us some met sample for the Quebec complex, so that we can ultimately get that advanced to feasibility. And then during the course of the year, late in the year, we think middle of the year, we are hoping to update the PEA. We never really spoke about that, but really to bring McLeod into the PEA as well. Because at this point, we kind of do a bit of arm waving when it comes to what does the value look like of adding those tons in, how much of a difference it makes, and it makes a big difference, is that we'll be working with G Mining again to update the PEA, to add in the resources from McLeod, as well as adding in the McLeod into the story. And we'll also be looking to potentially do some optimization of the economics on the Quebec complex as well, just to demonstrate, that we've got a little bit more time on our hands to demonstrate how we can increase the value. And we'll continue with the work on the permitting, really, in terms of how we've been raising money in the last 6 months. We've really focused on hard dollars for a lot of this. We've raised between the special warrant private placement that we closed at the end of July, and then the concurrent financing that we closed along with the RTO that we just finalized and started trading, what is it, a week ago now. That's all been hard dollars. That's about just over $16 million of hard cash, which we've been spending now on the work that we've been doing. We've now by the end of the year, we'll do a couple million of flow through. We really haven't been able to raise flow through while we've been in the process of doing the RTO. So we'll look at doing some more flow through just to fund the exploration, keep the hard dollars to continue de-risking the project, continue with the environmental work, the updating of the PEA, and all of that piece of it while we continue to explore. So really, it's the money going towards the first part of the curve and the second part of the Lassonde curve.
I like the sounds of that, Peter.
So that's going to be through to the end of the year, expecting to have EIA done, environmental impact assessment done by the end of the year. That's going to be another key important milestone for us. End of 2025.
Right.
Right. So end of 2025 is have that done. And then continue drilling. So we'll drill mainly in the first quarter. We shut the drills down for the spring breakup, and then typically we can sometimes start some of the targets. We'll be looking at sort of July, August to restart drilling. So the objective now is to
so there's only really a few months of downtime.
Yeah, there's probably around sort of typically we leave in at probably about 3 to 4 months.
Okay.
So that'll really be the time there to take all the results from the drilling, kind of get our sort of next phase of the plan together. And then the second half of the year is we'll provide more information on more in terms of specifics of where we're going to be going. But a lot of that is going to be determined by the success of some of these VTEM targets that we're going to be drilling, as well as the continuation of Renaissance. And
wow.
Who knows, maybe some gold stuff as well, but we'll wait and see. We've got a sonic drilling program that we're doing in Q1 as well, out on the western side of the property. We're gonna do a few holes out there, which has really never been tested at all. But so yeah, it's going to be just a little bit busy.
Lots of drilling, assay results, advancement of studies.
Yeah.
More drilling at the second half of the year. And you guys are well cashed up to do all this.
We are. We are, and we go into the end of the year, I think, sort of fairly well positioned for it. And we haven't raised all the flow through that we wanted to do, but we had limited time at the end of the year, but we'll look at doing some more flow through in the early part of 2025, and that will give us like that sort of 2 year window of being able to spend that flow through on the sort of build up while we're busy building up the idea of production restart.
Well, that's a great story you got there. The big wow factor, I'm going to have to call it or something, Peter. The right jurisdiction, Quebec, the infrastructure, the mill, the exploration potential. And like you said, you guys only have 50 million shares out, right? So you're
Yeah,
you're hitting the ground running with cashed up and you don't have to blow out your share structure to to accomplish a lot of your goals.
yeah, yeah. And probably the last thing also or one of the last things maybe to throw in there is that we've had incredible support from shareholders from day one. Right, we've been able to put together a good board. We've got a bunch of institutions in there that have come in and supported us really, really from the beginning, most of them, and continue to support us.
So
From
the
lead
stock symbol is, what's your stock?
NM NMC, Nuvau Minerals Corp, NMC
NMC, and the website,
is nuvauminerals.com.
nuvauminerals.com.
Follow
Well,
us on LinkedIn as well. We're gonna be trying. You're gonna try and teach an old dog about social media and stuff like that, and we're gonna be active there, and trying to build the story, because like, I don't know how long this has taken us, but it's a it's I don't think it's a complicated story. It's just a long story, and
because you got
so
so much to talk about, Peter. It's I hope people listen to this whole thing because it's full of a lot of great information. And did you have a quick closing comment, Peter? Did I forget to ask you anything?
no, I think you're putting me on the spot. I think Alan, I think the piece here is that we as one of my mentors once said, we came here to mine it. We doing exploration for the sake of building mines. We've been supported by a great group of shareholders to whom we're really, really grateful. We're fortunate to have an amazing team, small but incredible people, some of the both indirectly and directly, that really have supported us incredibly well, and we'll continue building on that. And the government of Quebec, the folk that we interacting with there, it's been unbelievable. It really has been an eye opener. Everybody said it was good, but it's better than I thought it would be. So, we'll be hitting the circuit in terms of, we'll be starting our January at the Vancouver Resource Investment Conference. So if anybody's around there, come and we love talking about the story. Myself and our CFO will be there, and we'll take as much time as we need. But yeah, we'll be all over the place, PDAC and everything else in between, telling the story. And so
Well,
follow
I
us
hope
on.
I hope I can help to get that story out there, Peter, because I'm really impressed.
Well, thank you. Thanks, and thanks so much for your time, Ellen. It really is. It's great to be able to tell it in with some of this detail, because it gets everyone excited. It gets me excited every time we
Yeah,
do it.
well,
So,
I got rocks in the name of my store in the name of my publication for a reason. I get juiced up about this stuff, Peter, and an hour and a 20 minutes went by like that. So thank
yeah.
you very much.
No, thank you, and happy holidays to you and your family.
Okay. Well, there you go, folks. Nuvau Minerals Corp is a brand new publicly traded company for a over just in the last week. But they've got a project that I describe has an incredible wow factor. And while they were going public, they were aggressively working prior to going public. So they've got a lot of news flow ahead of them. And what really makes it quite unique is something that Peter and I talked about, which is the Lassonde curve. You got the potential to go up the left side of the Lassonde curve on exploration potential, but then instead of having a big wide gap between making a discovery and bringing it into production, and you can have 10 years in between, they can narrow that so that both sides of the left and right side of the Lassonde curve look like that. And that is very difficult to find these days, folks. Do your homework, check out NuvauMinerals.com, and I think you'll understand why I'm so excited about this company. Have a great day, and we'll talk to you soon.